Studio, of course. I guess the key to this this week, or one of the keys, Chris, is the RBA decision on interest rates. How much attention is the RBA likely to pay to the recent strength of the Australian dollar? Is that a consideration at this next meeting?
Absolutely. I think it's something that they will be watching very closely, and certainly right to mention with the RBA. We know that long term, a stronger currency can pose a systemic risk to the health of a country, and we've seen that happen obviously in Japan, and we're seeing the benefits of what's happening over in the States at the moment with the falling US dollar. I'm not suggesting for a moment that aligning ourselves with Japan, but certainly in the future one of the factors which could be a negating factor for inflation. So maybe they'll consider this as a positive thing. I don't think that's going to be something which they're going to pull the pin on an interest rate hike tomorrow, but it could be something which in the future which provides them a little bit more leeway in terms of interest rate adjustments.
You know, last week we had a 6.3% drop, Chris, good morning to you, year-on-year decline in business lending. Now, when you consider that translates into businesses struggling to access credit, you know, you've got a call out there, Dow Jones Newswire quoting a chief economist of high-frequency economics saying that factor will stay the Reserve's hand. I mean, it's, you know, how much of a figure is that likely to unsettle you when you hear it?
Yes, it's certainly something that I suppose last week everyone was expecting an interest rate hike, and it did have an effect in the week, and we also saw private sector credit as well. So no doubt this, in conjunction with what appears to be signs of consolidation in the housing sector, will have an effect on what the RBA, or the outcome of the RBA interest rate decision tomorrow. But at this point, I think we also need to be looking at what we saw from the RBA directly on Friday, which is a commodities index, and it showed a 1.5% rise in special drawing rights terms over the month of September. And so no doubt they'll be closely watching that. They're there to preempt the curve, and I believe that's exactly what they'll do tomorrow. We should see further consolidation across business and private sector credits. You know, that's something they'll have to deal with at a later point. But at this point, I think tomorrow they're looking to preempt the curve.
It does seem, though, that there's a lot of positioning for that scenario in terms of all those longs on the Aussie dollar. Is there a chance that there's disappointment and then you see a very quick reversal of these gains that have been built up in the Aussie, which I think was about 8% against the US in September alone?
Absolutely. There's certainly this is a major risk event for the Aussie dollar, and of course we also have other risk events this week, namely employment and the like. So it will provide, if we should see interest rates stable, there is some downside to be had from this, and of course it does depend on the statement alongside. If the RBA continues to show a willingness to preempt the curve and increase interest rates in the coming month, whether it's this month or the following month, and we have more information on consumer prices, I think still we're going to see some of the steam taken out of the Aussie dollar. But at this point, it's pointing to, I think over 60% of the market are expecting interest rate hike tomorrow, and that's particularly GoMarkets view as well.
Just to understand, it's all very well to sort of you know, be ahead of the curve, but if you don't have access to the way producers and manufacturers are either absorbing costs fully versus passing them on to the consumer, which is that critical CPI print, Consumer Price Index. Why would you go ahead of knowing that? It just seems as if you're peering through a glass darkly and believing that it's all under control.
Well, it's a tough question. I mean, that's what they're there to do. They're there is to preempt that, and essentially, although we are seeing some signs of consolidation in the economy, I believe they'll make a stance to suggest that the price pressure is coming from China. It's boom time in China, and things are looking great. And you know, figures from Friday add credence to that point as well. And so at this point, I think that they're not necessarily taking a one-eyed approach to these inflationary risks, but it's something that they'll have on the agenda, and especially what we've seen out of the RBA in recent weeks has been quite bullish. And you know, I'm not an economist, but at this point, all I can do is read the signs that the RBA have given us.
And so, Chris, just to finish off, we've got people saying that this is a key week in the deciding of whether the Aussie dollar can reach parity, and of course a key week as well in whether we cement expectations for QE2 from the Fed, because we'll get a heap of data out of the US and then particularly those non-farm payroll numbers on Friday. But I just want to throw in here at the end the Bank of Japan and whether you expect any action out of it this week, given that the action it took at the end of August hasn't really paid dividends for them.
No, it hasn't, has it? And we do expect some feedback out of the Bank of Japan this week. Whether it's further quantitative easing, it's very hard to say at this point. What they'll probably see some conjecture come out and essentially say that they're committed to weakening their currency, and they'll do whatever it takes to do so, and of course combat deflation. And so that in itself may, or the premise of further action by the Bank of Japan, whether it be intervention or quantitative easing, may be a stabilising factor for the yen. So at this point, and one thing that we also fail to see at some times is essentially we're seeing some currencies such as the Aussie and Euro strengthen against the yen quite considerably over the month of September. So I think if we have a look at the Euro-yen cross, that's gained around about 7.5% in September. So that's certainly one factor that many people overlook. It's not all about the dollar-yen cross. It's Euro's a major counterpart.
Great to hear from you, Chris.